Market trades in the green amid volatility. Sensex trades below 70,600. Meanwhile, Nifty hovers around the 21,300 mark. Most sectoral indices in the green. Banks lose gains after early gains. Media and metals top the gainers list. Meanwhile, Axis Bank comes out as the only sore spot in Bank Nifty. Now, as the company's Q3 earnings fail to enthuse investors. And on the watch list today, two-wheeler major Bajaj Auto and TVS are all set to report their Q3 numbers. Double-digit increase in profitability is expected. And it's an NDTV Profit exclusive. Sources tell your channel that the granular details of FPI's beneficial ownership are likely to be less than what SEBI estimated. The impact is expected to be limited.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia. And you're watching all that we can look for in terms of all the stocks which are buzzing in trade today. And for now, let's take a look at the markets, which are in fact have given up all the gains that we saw through the course of the day. Now, at least as far as the Nifty is concerned, it is currently trending in the green, but it is flattish now, and that 1% up move is no longer present as far as the benchmark is concerned. It is the same for the Nifty, Bank Nifty, pardon me. And in fact, the Bank Nifty has gone into the red and also lost out on the 45,000 mark, now at 44,900. So there certainly seems to have been some weakness which has moved back. Remember, at one point in time, we were nearly there at 45,500, and well, you know, the weakness in the bank need just doesn't let up. So we do have a lot of weakness which is returned to the benchmark. The question really is how much longer do we have to wait before we actually start seeing a bout of short covering? You know, a lot of analysts that we have been talking to are suggesting that the volatility is not over. We are not yet out of the woods for now. It's going to be a wait and watch, and we certainly could have some more induced volatility before well, the upcoming vote on account, which happens, of course, on the 1st of February, this upcoming Thursday. We'll be keeping an eye on that one. That said, as far as your broader markets are concerned, again, given up a lot of the gains through the course of the day, but we do have a little bit of recovery playing out for the likes of REC and PFC, which are the top gainers as far as your well, mid-cap index is concerned. ICICI and PFC, there's no stopping these, is there? Because we're seeing these stocks move advanced by around 5.5 to 6%. Z Entertainment is now seeing a bout of, well, short covering coming through. This is advancing by as much as 5%. No specific news updates, but of course we will be taking this up with our expert as well. And as far as you know, your losers are concerned, very quickly, we are still looking at a lot of weakness in Oberoi Realty for the second straight session, down 6.5%, and Tata Elxsi, which is also another one of the fund favorite, which is down around 4.1%. On the whole, markets are looking less stable than they were about a couple of hours ago, Hiral.
Absolutely. But clearly, if you go to see Agam, there's a little bit of outperformance coming in from the broader markets as well in today's session after the kind of cuts that we've already seen. But let's quickly pick up all the stocks that we'll be discussing in trade today. REC, as Agam mentioned, that's going to be on our radar in today's day of trade. From the banking pack, you have Karnataka Bank, South Indian Bank, Axis Bank, as well as an HDFC Bank that will be in focus. We will be looking at IFCI, which has seen a good buzz overall. Tata Steel, DLF, that will be reporting numbers today, as well as a Tech Mahindra that will be reporting numbers today. So these are a few of the stocks that we will be discussing with Ashish Kapoor, CEO at Invest Shopee. Ashish, good morning, good afternoon, and welcome to the show. But before I come across to you, let's quickly pull up our REC on the screens and see what the counter has done in trade, because clearly a good up move coming in there, and this is on the back of the way the earnings have panned out, 6% upside. We did speak to the management as well. Let's hear him out.
what we had achieved in last year in 1 year, this we already achieved in first 9 months of the current financial year. With regard to sanction, we have sanctioned more than 3,25,000 crore in first 9 months, as compared to 2,68,000 crore, which we had sanctioned in the last financial year in 12 months. Similarly, our disbursement has increased phenomenally. Last year, in the entire year, our disbursement was about 97,000 crore. At the end of 9 months, on 31st December 2023, our disbursement has touched 1,22,000 crore. So we are doing exceedingly well, and our asset under management is growing at the rate of 20%. So we hope to maintain this growth trajectory, and our focus is on renewable energy projects, that we are going to increase our renewable energy portfolio, and we are also focusing on non-power infrastructure and logistics. That growth is happening. Our asset under management is growing at the rate of 20%.
So AUM growing at 20%, disbursements to cross 1.5 lakh crore in FY24. Ashish, how are you looking at the REC with the kind of run-up that we've already seen in 2023 and now? And simultaneously, a PFC also has been on the buzz. What would you advise investors to do?
Well, I think the run-up has been quite immense. So despite the change in fundamentals and the re-rating, I think the run-up is a lot. I think the correction which has started was long overdue, and I think will take time. So you can hold on if you have bought at the lower levels and you are a long-term investor, hold on. But fresh buying can easily be deferred. I think you will get better rates going forward. Do look out for buying opportunities, but I think that would be closer to 400, where the comfort factor on the risk reward would be favorable.
Okay. From there on, we move on and address two public sector banks because they've come up with their earnings. The first one is Karnataka Bank. Their net interest income on a year-on-year basis has really not improved as much. We're in fact looking at a deceleration of 1% year-on-year. That said, its profitability has risen 10% year-on-year. But of course, we must keep in mind that a lot of other factors will play in favor of profitability. A lot of that could be one-offs as well. The provisioning, however, has stayed higher by as much as 12%. This is, of course, once again year-on-year, even though the sequential number would be a little more pertinent. And moving on, we also have South Indian Bank. That is also where we have seen a decline in net interest income to the tune of 1%. And your net profit has, well, moved 3 times. But again, we have to remember that this is largely on account of one-offs. It's a gross NPA numbers and net NPA numbers have come off sequentially to a certain extent. But I reckon, to a certain extent, we have to keep in mind the kind of impact it can have, the systemic impact, well, a lot of these banks can have, should we see weakness as far as some of these counters are concerned. Ashish, how are you viewing the PSU space in general, the PSU banking space in general? It certainly has outperformed the private sector banks of late in the last 1 to 3 months period. But how are you placed, and if there are any counters that you like in this sector?
Well, I think the outperformance will continue. Yes, they can be more volatile because, again, here the run-up has been a lot. But I think stocks like SBI to start with, and even Can Bank, BOB, PNB, all have, I think, reasonably good upside potential. So I think one should stay invested and look for buying opportunities on the way down. I think despite the run-up, there is more steep, but of course, buying can be done in a staggered way because there would be more volatility going forward.
Right. So that's with regards to where the PSU banking space goes. Overall, if you go to see, the private banking space also is in focus from an ICICI Bank to Axis Bank as well as the HDFC Bank. These are stocks that we will discuss right after a short break. Please stay tuned to NDTV Profit. Welcome back. You're watching Hot Money. Now, from the private banking space, you have Axis Bank as well as HDFC that is in focus. HDFC, clearly, if you see their market cap, yesterday it fell below the 11 lakh crore mark. Today, you're seeing some bit of a recovery that has come in on that one with gains of 0.7%. And another one that is in focus is with regards to Axis Bank as well. And this is again with regard on the back of the Q3 numbers. Now, Mimamsa is standing by to help us understand more in terms of, what has happened with an Axis Bank with regards to numbers and what are brokerages making out of it. Mimamsa, over to you.
So Axis Bank reported a nearly 4% year-on-year rise in its net profit, which was in line with what analysts were expecting. Sequentially, too, the bottom line was up 3.5%. Now, the total income of the bank during the quarter rose 25% year-on-year, with the core income rising 9.5%. Yet the net profit was up by merely 4%. So one thing that has weighed on the net profit of Axis Bank is the operating expenses, because they have accounted for the integration expenses related to the Citibank's acquisition of Citibank's consumer business in India. So the pace of rise in the net profit has been little slower this quarter because of the higher operating expenses, which rose 30% this quarter. Now, net interest margin also fell by 10 basis points to 4.01%, but analysts are drawing comfort from the fact that it remained above 4%, even as the cost of deposits fell sequentially. But sharp compression in net interest margin here on will be a key risk, this is what the analysts are expecting. ICICI Securities accepts NIM to compress 10 basis points in FY25 and 26 for Axis Bank. Deposits, however, showed a strong growth of 5% quarter on quarter, considering the extent of liquidity shortage in the financial system. And several brokerages have said that deposit growth is one key highlight for Axis Bank this quarter, because it is among the highest, among the best in the banking industry so far. But this is due to the growth in non-retail term deposits. So the bank needs to accelerate its efforts in retail deposits mobilization to avoid constraining loan growth. This is what the analysts have been saying, and the management has also pointed out in its post-earnings media call.
Right. Thank you, Mimamsa, for getting us these details as well. Ashish, coming to you, Mimamsa just took us through with regards to Axis Bank. HDFC also, it seems to be some bit of turbulent waters after the kind of selling that we've seen on this counter. And it's interesting to see how ICICI Bank, from a valuation perspective, has actually surpassed our HDFC Bank by a marginal number. And this is almost after a decade. If you have to look at all the three banks, what is your view and what would your topic be?
Well, depends on your perspective. If you are looking at a longer term perspective, 3-year plus, then clearly it should be HDFC Bank, because I don't think you will get HDFC Bank much cheaper than what it is currently. And I think despite all the negativity surrounding it, the fact is that I did not see anything so wrong with the results. I think it is expected that the merger will have its repercussions and will take a little time. I think they are going as per the target on more or less on all the fronts. And I think end of the day, it's just, the matter of perception. Till a few years back, HDFC Bank was the darling and was bought at every decline. Now it's a reverse. This could go on for some more time. I'm not saying it'll reverse in a hurry. But if you're a 3-year plus time horizon investor looking for something very safe in this market, then clearly it should be HDFC Bank. Axis, I think, is avoidable, because I think Axis, the run-up was a lot and results have not really lived up to the expectations. So Axis could come down more. I think 980 is our kind of a short-term target. 980 is where I would think you should look at buying. So another maybe 5-6% lower from here. ICICI Bank, I think we're looking at a shorter perspective, maybe 1 year, 2 year. Then ICICI Bank, clearly, the bank has consolidated also. And on the current performances, they're doing very well. And I think the re-rating would continue. So I think with a 1 or 2 year perspective, it should be ICICI Bank. And longer than that, it should be HDFC Bank.
Okay, stay with us, Ashish. Also want to address IFCI. Now, we've seen an interesting move in IFCI. earlier known as Industrial Finance Corporation of India. Now it's just IFCI. Now, what's really happened here is that it has gained as much as 50% in just about 3 to 4 trading sessions. Is there anything in terms of an update? No, not yet. We must also remember that IFCI is one of those PSUs which is not profitable, and in the first half of this financial year, it has in fact made losses. So no EPS coming through, and we haven't seen too much in terms of its net interest income growth either. But we are still seeing a staggering amount of interest as far as this particular counter is concerned. Of course, while its market cap stands at around 11,000 crores, a lot of it has been gained over the course of the last 3 to 4 sessions. And more importantly, it has moved from a 32 rupee share to as much as 46, 47 rupee share as we speak. Ashish, any view on this one? Would you want to perhaps delve into this or maybe avoid IFCI at the moment?
I would certainly avoid buying, I think, till some clarity comes in. And if you have been lucky enough to buy at lower levels, I think you could hold on, because there could be 2 reasons. One could be generally because the government stocks are going up, so there could be some hope of something happening here. And second could be actually something going up. We'll have to wait and see. So no fresh buying, because like you rightly said, I think the stock has nothing much to offer in terms of numbers, and has a very, very long history of underperformance and disappointment to investors. So I would not be in a hurry to buy, but if you've already bought in, you are sitting in some profit, so you can hold on with a stop loss near your purchase price. So maybe something is brewing up, which you'll come to know in time to come.
Fair enough. Keep an eye on that one. But it's time to slip into another short break. But on the other side, we talk to you about much more in terms of Z Entertainment and DLF. Stay tuned in.
Welcome back. You're watching Hot Money. Another stock that has been in focus from the media pack has been a Z Entertainment. Let's quickly pull up that stock on the screen. Some 5.5% upside, some short covering that has come in on a Z Entertainment after the kind of fall that we've seen in yesterday's session. Now, clearly, on the back of the fallout of the merger with Sony, you have majority of the brokerages which have gone ahead and downgraded the stock and reduced the target price on a Z Entertainment as well. But what would this actually mean? Because the kind of cuts that we've seen, is this an opportunity to buy a Z Entertainment from a fundamental perspective? Or is this the best time to continue to book profits? Let me take a question with Ashish on that. Ashish, how are you looking at a Z Entertainment?
Well, I think to begin with, I was, very nastily surprised by the fallout because I was quite certain that the deal would go through. It was a big synergy and big benefit to both the players. And I really don't see what was the, great issue in having the chairman, in Mr. Goenka. I don't know, but something apparently was not very clear why the deal fell through. And I was like I said, I was negatively surprised in disclosure here that I have Z in my own portfolio. So I was quite wrong to begin with. But having said that, I think it's clearly a stock to hold. And maybe at some point when clarity comes out a little better on the damages which Sony is trying to recover, or a possible deal which might merge, might come out later on between Z and some other player. I think that time we could add more, but for the time certainly hold on. Why I'm saying hold on? Because it is too big a player to be ignored. It is still the largest in media, and it's very well entrenched, has all the segments with it, and as well as OTT. So I think it's still a very, very formidable player. And so whosoever finally gets the management control in whichever way it gets it, the stock still, I think, in my opinion, the company has a very good future. It's just that now, obviously, it's going to take a much longer time for any returns or any profits to come. But for the moment, I will certainly say hold on. I think the majority of the damage is behind us. And if it does really come down to ridiculously low levels, maybe somewhere around 100, then certainly go ahead and start buying. But defer the buying for the moment till it comes down to such an attractive level or some clarity emerges on how the future is going to shape up. But so don't sell in this panic, and certainly hold on and try and, of course, keep your holding period to maybe as long as maybe 3-4 years before. And in that time frame, I think everything should get sorted out, and we should see a much higher rate on this script.
Right, we shift focus to earnings to watch today, and Tech Mahindra is set to post a steady December quarter with margins expecting to expand. Tushar Singh is standing by with more details on this one. Tushar.
Thank you so much, Agam, and good afternoon to you and Hiral as well. So very quickly, this may be the third straight quarter of revenue decline for the company, sticking with the seasonality at play during the October-December quarter that we see. As you pointed out, yes, there will be some improvement in the margin levels and the profit levels, but they will still be far away from the tier 1 pack, so what we have seen so far. The strategy on, so the performance on the CME, the communications, media and entertainment vertical will be key, as well as the BFSI. Remember, the telecom or the communications vertical brings in more than 50% of the company's revenue. So what one should watch out for? First of all, the timeline for the demand recovery in the CME vertical. Again, since it's about 50% of the company's revenue, very key metric to watch out for. The strategy under new CEO Mohit Joshi. So very interesting point here, because this is the first quarter with him at the helm of affairs at Tech Mahindra. So he is a BFSI veteran. What he brings to the table as far as BFSI is concerned is one to watch out for. Also, he has also effected a restructuring late last year. So what can be the outcome? So some color on that will also be one to actually watch out for.
Right.
And the strategy and margin recovery, there will be some recovery, but they are still far away from tier 1 pack. So right. On those lines.
Right, Tushar, thanks so much for getting us those expectations. Very quickly, if we could actually take this view up. Ashish, your view on Tech Mahindra, can we expect some amount of outperformance here?
Yeah, I think the large cap IT looks very interesting, including Tech Mahindra, and I think the returns and the returns both for the company and the shareholders should improve going forward. So certainly stay invested, and if the decline does happen, maybe another 5-7% below, you could start buying in a staggered way.
Okay. Well, there you have it. Ashish, on that note, we take a moment to thank you for joining us and taking us through your views on the many stocks that we've discussed. And with that, it's a wrap on Hot Money. But on the other side, lots more lineup. Stay tuned to NDTV Profit.